Welcome back. We are now seeing the Ethereum exit queue from staking continuing to be with a 40-day plus hold and more Ethereum exiting the staking queue than entering. And what does this mean? Well, in today's video, we're going to be exploring the big red flags. We're going to talk about the descending triangles in certain cryptos, where we are in the cycle in terms of days since the halving, and really kind of take a little bit of a deeper dive into some of the cryptos outside of Bitcoin and the Bitcoin treasury companies, because this is what we've been talking about mostly. But a lot of people are still anticipating alt season. And like I said, we basically already had alt season in 2024. And a lot of people think that we're going to have one still in 2025, but I still remind most of my viewers that these legacy cryptos that we have out here, many of them have not reached their all-time record highs in multiple years. And some of them hit their highs and haven't gone back since. And so where are we in the cycle? Where are we going? Let's get into it. And we're going to start right here with Peter Brand. He said, as a market speculator, your self-doubt will be directly correlated with your uncontrolled senses of coulda, woulda, shouldas. This is the Cryptoviser podcast. Make sure you guys give this video a free thumbs up. Also hit that subscribe button. We upload every single day of the year to bring you the latest happening in the financial world. So give the video a free thumbs up. Let me know your thoughts down below in the comments, and let's get into today's video. Now, what exactly does this mean from Peter Brand? In my view, effectively what he's saying is your self-doubt, if you are doubting your thesis or you don't even have a thesis, right? This is going to be directly correlated with coulda, woulda, shouldas, right? I'm getting a lot of comments on my channel. You're going to regret this, Cryptoviser. You're going to regret selling your crypto. You're going to regret getting out of this crypto. You're going to and it's like, that's not how to invest, right? That tells me that you don't have a thesis and you don't have a strategy in the market. Because if you did, my analysis shouldn't impact your emotions to that degree, right? If you disagree with what my thesis is, you disagree with the data that I'm showing you, you disagree with the days since the Bitcoin halving, hitting the previous two all-time highs in terms of days since the halving. If you would disagree with all of that, you can say, okay, I disagree, I'm going to double down, right? Or if you're that bullish on the market, you should be dumping your whole bank account into crypto, right? If you think that Bitcoin is not at all-time record highs, even though it literally is at all-time record highs, why are you not dumping your bank account into crypto? If you're that bullish, well, you're really not that bullish, right? You don't have, if I was so bullish or so bearish, like if I said, no, Bitcoin is 100% going to $70,000, there's no doubt about it, my entire portfolio would be in that trade. But even though I believe that we're going to hit $70,000, I'm not at 100%, right? Probably at about an 80-20 that we're going to go down to $70,000 within the next 6 to 12 months. And so there is no coulda, woulda, shouldas in my investment thesis. Every trade is an independent trade. When I close the trade out, I move on. Sometimes I look back and say, damn. But sometimes I look back and it's like you get you feel the desire to say, oh, I should have stayed in. But at the end of the day, if you exited a position in profit at the time, that was the right trade for you. And if you exited even in a loss, that was the right trade for you back in 2021. Actually, 2022, it was right before the FTX collapse in October. I told my viewers, you may want to consider taking some of your money out of the market. And yeah, even if you're in losses, because in my thesis, the bottom of the bear market was going to be 1 year after the Bitcoin top. And by the way, it was to the day. And so people were like, Cryptoviser, you never want to close a position in a loss. And I'm like, you do, because you could still go down another 95%. And sure enough, a few weeks later, FTX collapsed, and so did the whole crypto market. And because many of the people who watch my channel did that trade, right, took losses to shore up capital, they were able to buy the macro bottom of the bear market, $15,500. I actually looked at one trade, which was correlated with the same day that Bitcoin was at about $18,000. And so, yeah, I called the top of the market and I called the bottom of the market in the previous cycle. This cycle, we're looking at a more macro view. So we've been basically talking about the top of the market since the beginning of the year, but we called the top of the market in June and July, which basically was the top of the market. Everything after that has been just volatility. This is when all the Bitcoin treasury companies launched, the Ethereum treasury companies launched. That's what went on. And there's been all this speculation about what is going to happen with Solana, what's going to happen with XRP, what's going to happen with Ethereum, even Dogecoin, and none of it has come to fruition, none of it. And now we have a chart warning from Peter Brandt, who is a trader. He doesn't do coulda, woulda, shouldas. Sometimes he doesn't even trade on his analysis. He's just analyzing the binary options. Is this going to happen? Is this not going to happen? What is the chart showing? Let's get into it. So Peter Brandt, well-known trader in the markets, said on the left, this is a classic descending triangle from Edwards and McGee, showing what descending triangles are supposed to do. This is the chart that he posted, which is the Revere copper and brass chart, and you can see a descending triangle. Now, we will get into what a descending triangle means in just a second, because then he talks about XRP. So what is a descending triangle? A descending triangle is a technical analysis chart pattern that indicates a continuation of a downtrend or consolidation phase within an uptrend, recognizable by a series of lower highs and horizontal support levels. This pattern offers insight into market sentiment and potential breakout and profit opportunities for traders. Traders generally use descending triangle patterns to create short positions, buying the breakout of the pattern. The counterpart pattern is an ascending triangle, characterized by a series of higher lows and horizontal highs, which provides potential breakout opportunities and profits from rising prices. So effectively, this descending triangle, you can clearly see here in this chart, shows, this is Revere and brass. I don't know if this is current dates or not, but it doesn't matter. It's just a chart pattern that we're just looking at. And you can see this horizontal line shows the support at the bottom, and this is a descending line on the top, right? Lower highs. And so a descending triangle, it doesn't mean that this is going to break out to the downside, right? Charts give you insight into rhythms of the market, but they're not 100% accurate. Like, this is why I'm not really fully into charting, but I do like to look at charting because charting can give you more data to formulate your thesis on where the market is, right? Even if you're bullish on what we're about to talk about, which is XRP, understanding the risk profile here of a descending triangle on an XRP chart could give you at least a little bit more risk. So instead of being 100% bullish, now maybe you're 80% bullish, right? And if it continues to play out in a descending triangle wedge, you can become even less bullish. This is how people change their thesis from being a mega bull to a mega bear, right? It doesn't happen immediately. It happens over the course of time as you more and more data come into the picture to say, whoa, this is no longer bullish, right? Because once you're at the top, like once you're like already hitting highs and people are like, oh no, we haven't hit euphoria yet. It's like, what? People made 10x on these trades already. And this is, you don't get 10x's very often in the markets, right? Oh, this is 1946. So wow, quite the pattern. But then you can see that it broke out to the downside, right? So anybody who took this as a descending triangle and shorted this Revere copper and brass, RVB, they made a lot of money. Peter Brandt continues, saying, on the right is a developing descending triangle on the XRP. Only if it closes below $2.68, then I'll be a hater, he says. Then it should drop to $2.22. And what you can see here is the XRP chart dating back to basically the middle of the year, around July, when we called the top of the market, right? The macro top of the market. And by the way, a lot of people get this confused. They're like, well, Cryptoviser, you said the top of the market and we went higher. And for Bitcoin specifically, that's true, right? I called the top of the market around $110,000, $115,000. And I said when I made that call, we can still go higher, But I don't think that we're going to go to 200 or 250,000. And if we do, it's going to be for a very, very short period of time. As soon as we get there, wick right back down. And sure enough, we're at $126,000 all-time high at the time we're recording this video. And people are already on my channel saying, Cryptoviser, you were wrong, you were wrong, you were wrong, you were wrong. And I'm like, you're not understanding what my thesis is. So clearly you don't watch the videos, or you don't really have a full grasp of how investing actually works, right? Because calling the top, I mean, 115 and 125,000, there's not really that big of a difference. And if you do think there is, from a risk standpoint, there's not. But anyway, this is the XRP chart, and you can see since July, we've been in this horizontal line and a descending triangle on the lower highs. That is a risk, because effectively what this shows me, and this same thing is going on with MicroStrategy. If you look at the MicroStrategy chart, it's the same thing, because the bulls try to bid it up, but then once the bulls run out of money or slow down, it goes straight back down, right? With MicroStrategy, the bulls or Bitcoin price going higher bids the MicroStrategy price up. But then Michael Saylor steps in and starts selling shares on the open market. And so he's effectively creating these tops. And the more that happens, the more bulls stop buying into the market. And so if you still have all this sell pressure to the upside and less buy pressure on the downside, well, what do you think is going to happen next? People are going to run out of steam. The uptrend is going to run out of steam. And then you just have a straight line down. I mean, if you look at the psychology of markets charts, this is the same thing. This is why I believe that we are in complacency phase in Q4 of 2025. Because once you're in the euphoria phase, people are like, oh yeah, we're going higher, we're going higher. They're not even able to see that we're at the top of the market. And then in the complacency phase, you get a lot of buying up, right? People trying to bid up the market again, saying, oh yeah, this is the most bullish, dump your whole paycheck into it. But then once they either lose confidence in that trade, right? Too long of sideways trading, other macro factors like MicroStrategy continues to sell shares on the open market, that can push a lot of people who were buying to stop buying and even potentially dump their shares or dump their crypto, right? And then once that happens and the downside or the upside is just disappears, straight down. It's not like a slow decline. No, it's straight down for months, sometimes years. I mean, remember, some of these cryptos still have not reached their all-time record high. We're seeing a lot of Stellar recently in the crypto news. Stellar hasn't reached its all-time record high since 2018, and since then they burned half the supply of the coin to begin with, and it still hasn't reached all-time record highs in 7 years, and that tells me it probably never will again, right? But there's still people like, no, Cryptoviser, this is a great opportunity, and it's like, are you sure about that? So yeah, this is what Peter Brand is saying about XRP. And again, guys, since the XRP lawsuit was kind of like moved on from, which was about a year ago, and the price moved up since then, there hasn't been really any catalyst besides Ripple continues to sell XRP on the open market every single month to fund their development, and Ripple's development, not XRP's development. Because here we are a decade later and Ripple still has not forced their clients to use XRP. RippleNet is not XRP. It doesn't need XRP. Ripple doesn't need XRP. If Ripple needed XRP, they would not be selling every single month, and they are. But the bulls won't say that. And by the way, remember, Swift chose Chainlink, not XRP. Anyway, this is another chart of perpetuals. This user, and by the way, Peter Brandt did respond and basically agree to what she's saying here. She said the chance of a fall is also increased by the presence of divergence on higher time frames. Meaning if you zoom it out, yeah, you can clearly see like, what is the catalyst? This jump in the price was the Trump pump, right? After Trump was elected president, and it kind of confirmed that the SEC would not win against Ripple, and the lawsuits would be a thing of the past. Since then, there's been no major thing. Think about it. For years, Ripple has been promising, oh, we're going to do this, we're going to do this, and they have done a lot. Ripple has done a lot, and they are a great company, I believe. But again, that's a Ripple. That's not XRP. They haven't done really anything for XRP, at least in a publicly stated standpoint. And how do I know this? Well, they continue to sell XRP on the open market. Same thing that MicroStrategy is doing. And so this is negative for the crypto in the longer term. In the short term, it can be very bullish, but in the longer term, guys, what is the catalyst? Is the XRP army buying XRP? Because if they're buying XRP, they're buying it directly from Ripple. I don't think so. And so what does that mean? Well, even CoinDesk is saying XRP crash brewing, price continues to print lower highs alongside new highs in Bitcoin. And this is true, it says since July, every upswing in Bitcoin has triggered rallies in XRP. However, XRP has consistently produced lower highs. A lower high occurs when a price peak is lower than the previous one, indicating weakening buying pressure. But the selling pressure is constant because Ripple keeps selling every single month. Who's buying? Wall Street's not buying. Swift is not buying. The banks are not buying. They're not even using Ripple. They're using Chainlink. They're using Ethereum. They're not using Ripple or XRP. The persistent pattern of lower highs in XRP alongside Bitcoin's new highs signals underlying weakness in XRP's momentum, a sign of less conviction among XRP buyers compared to Bitcoin. It suggests XRP may be vulnerable to sharper losses. So let me know what you guys think about that. Moving right along, Polygon partners with Alloy X and Standard Charter on a tokenized fund. Now, as you guys know, if you've been watching my channel, Polygon is the premier layer 2 on Ethereum. And the banks, they're tokenizing around the world. The banks and the stock exchanges and all of this, they're tokenizing on Polygon. They're using Polygon for a lot. And this is bullish for Polygon, even though the Polygon price activity is absolutely abysmal. I mean, really, really bad. And again, this could show that, the price activity is just not where it needs to be. The all-time high was, it says $1.29, but this is the new Matic. They rebranded from Polygon to Matic, so some of the data from Matic didn't transfer to Polygon. But the all-time record high of Polygon was about $2.90. Now we're at 23 cents, right? Under 25 cents. And it's been struggling pretty much all year. But all of this is happening on Polygon. So is this something that we should be looking at? Or is Polygon just another stellar where it's not going to reach all-time highs, but it's going to still get the adoption and use cases that should be pushing the price up? Well, Polygon has begun the launch venue for new tokenized money market funds developed by Alloy X with Standard Charter taking the role of custodian and registrar. Previously announced, this partnership is designed to offer institutional investors a bridge between traditional regulated fund products and blockchain-based financial infrastructure. At the center of the rollout is Alloy X Real Yield Token, which represents exposure to the China Asset Management Select USD Money Market Fund. Unlike conventional shares, these tokens are issued and transacted on the Polygon blockchain, while Standard Charter ensures off-chain asset custody and record keeping. Alloy X also integrated Chainlink's proof of reserves and NavLink to provide real-time transparency into the assets backing the token, aiming to address the common institutional concern about on-chain financial products. And so pay attention to what's going on here, because this is real adoption of the technology, and this is really what we're looking for from an investment perspective. Grayscale is now staking $150 million in Ethereum as the SEC altcoin ETF's deadline approaches. Now, from my understanding, they're now staking 2 of their funds. I also saw that Coinbase has rolled out more staking availability in more jurisdictions. And this kind of goes in line with what the SEC has been saying, that staking is not a security versus the previous SEC administration that was saying everything is a security. I mean, We even heard from the SEC commissioner recently, and he said, the SEC is there to regulate securities, not regulate everything, something to that sort. And this is true. I mean, when Gary Gensler said that staking is a security, I think everybody was kind of like, wait, what? Like, explain that. Because it's just securing the protocol and getting paid to help secure the protocol. But again, this is bullish in the longer term because now this allows Ethereum and any of these staking protocols that are, actually getting adoption like Ethereum is from the banks and all of that. This is more lucrative for the banks because now they are earning yield. Now, keep in mind, yield on staking historically has gone down and it will continue to go down over time because effectively you're hoping that the asset appreciates. So if the price of Ethereum, let's say, goes up by double, but the yield drops in half, it's technically the same thing, right? You're still technically making the same amount. I think they changed the site. Let's see. I want to see Ethereum. Here we go. So right now, Ethereum is showing a yield of 3.05%, which is lower than it was, in the previous cycle. It was closer to like 6 or 7%, but the price is also somewhat higher than it was at that point as well. But again, this is lucrative for the big institutions because now by them holding the coin or transacting in the coin, they can also earn yield on the coin. Meanwhile, we're now hearing New York Stock Exchange parent Intercontinental Exchange has invested $2 billion in Polymarket at a $9 billion valuation. And this goes into what we've been talking about more recently with Polymarket and Kalshi, these prediction markets that they're going to continue to get regulatory approval and continue to grow, in my view, because, it's the same thing like we saw with sports betting and online casinos. These have really soared over the last 5 or so years. And a lot of it just comes back to, in my view, like free market, right? And so these betting markets, there's going to be a lot of, if you go to Polymarket, I think it's actually one of the most interesting things because like they even have markets to predict how many tweets Elon is going to make in a week, right? This is how you can make money or you can lose money, one of the two or both. But I do think that this is going to open up more opportunities for people. It's kind of the new gambling, right? We know that like if you look at places like Vegas that are historically gambling places, the newer generations, the younger generations, they're not gambling as much. The casinos are making more money on gambling, but people are not gambling as much because they see it as the casino is making it harder for me to win, even like in the payouts or the odds, 000 on a roulette table, like those kind of things. Where in Polymarket, it's just straight betting, right? In sports betting, it's straight betting. If you love your team and you think your team is the best in the world and you want to bet on it, well, if you think they're going to win and they do win, you win, right? And it's not really, the house is not getting the edge the same way that a casino is. And Polymarket, Kalshi, all these betting prediction markets, I think, are the same thing. But now New York Stock Exchange backing this company with $2 billion and giving it a $9 billion valuation, this is pretty big. Polymarket said on X the following. Polymarket said, "We are excited to announce that Intercontinental Exchange, the parent company of the New York Stock Exchange, is making a $2 billion strategic investment at a $9 billion post-money valuation. Together, we're building the next evolution of markets. A special thanks to all those who supported us till now. This is just the beginning." So we'll see where this goes. Moving right along. And now we're going to be getting to kind of toppish signals and more warnings in the market. Because we've been talking a lot about the Bitcoin treasury companies, the Ethereum treasury companies, but there's a lot of other ones. And I think that, like this one, for example, Forward Industries launches a Solana validator and has almost 1.7 billion Solana dollars in Solana staked. And this is a publicly traded company that is becoming now a Solana validator, and they're also a Solana treasury company. The company announced that the validator they run on Double Zero's fiber network, which powers the validator and uses Jump Crypto's Fire Dancer, a new independent Solana validator client. The chairman of the board of Forward Industries said the move allows them to fortify Solana's resilience and help ensure it remains the standard for institutional adoption in DeFi. Now, this is interesting, and it's also kind of a signal into what the future is, right? This is Wall Street taking over crypto, and not just taking over crypto, the currency, taking over the networks. Because now, I mean, we've known for a while, like Google, Amazon, they've been running nodes on some of these different ecosystems, but now companies that are publicly traded, they are they're bound to the U.S., right, and bound to U.S. rules, regulations, laws, money movement, and all of that. And so the fact that you have publicly traded companies now holding large quantities of Solana, staking large quantities of Solana, and validating on the network, they effectively are beginning to control these networks. And that's the way that you really got to look at it. Wall Street is taking over. And so this could be good because obviously Wall Street wants to make money. And so if they're going to make money and you're in the coin, you could also make money. But it's also an indicator of Wall Street likes steady and constant and slow returns. They don't want a lot of volatility. And so what we're seeing is they're limiting the volatility to the upside and limiting the volatility to the downside. We've seen this across the board this cycle in the products that Wall Street is involved in. And this could also be part of the reason that a lot of these cryptos have not reached all-time record highs because they're not in the Wall Street line of sight. And the ones that have had major volatility like SWI and Hyperliquid and Aster, guys, these are just like new coins popping up. And so it's very easy for a new coin to go up thousands of percentage points, in the early stages. But typically what happens after that is it comes right back down. I mean, we saw that in the previous cycle with Solana. Solana went to $260, and then in the bear market went down to $8. Then it went back up to 200, and it's showing January went up to almost $300. I don't even remember that, but I guess it did. And we haven't been there since. And are we going to drop after? Potentially. We'll have to wait and see. But we are, going back to Ethereum for a quick second. Bit Digital, which is a Bitcoin mining company that just recently transitioned all the way, sold all of their their Bitcoin mining nodes, all their Bitcoin, and now they're a full Ethereum treasury and Ethereum staking company. And now they bought 31,000 more Ethereum worth $140 million, and now they're the 6th largest Ethereum treasury company. Now, we've been kind of really keeping a close eye on Ethereum from a price perspective, but also from a metrics perspective, because we have been seeing the price has Ethereum basically almost hit $5,000, but not really. And that's the all-time record high, just slightly above the previous all-time record high. And a lot of people are like, well, we're going to get I even thought earlier in the year, we were going to get $10,000 Ethereum, $15,000, $20,000 Ethereum. Some people were talking about $50,000 Ethereum, but we didn't hit that. I mean, it's pretty annoying, but we haven't hit that. Why haven't we hit that? Well, a lot of the hype around the Ethereum treasury companies, they're buying Ethereum directly from large holders who've been selling off their coins. How do we know this? Well, look at the Ethereum validator queue. If you're staking Ethereum, there's a wait period to enter staking, and there's also a wait period to exit staking. This is to kind of protect the network from massive outflows, right? And what we're seeing is this 42-day wait period is because there's almost 2.5 million Ethereum trying to exit staking. And so whenever you see a big staking network and large quantities exiting staking, whether it's Ethereum, Solana, Cardano, any of them, that's a red flag, because the only reason somebody is exiting staking is to sell. Maybe to move wallets, but that looks like a sale on chain, because you don't need to, there's liquid derivatives that you can access your staked coin, like Lido liquid staked ETH, so that you can have some coins in straight staking and some in these liquid staking coins, so you can still access and utilize your coins for DeFi and stuff like that. But we've been seeing this for 2 months already, since the beginning of, or I'd say the middle of August. So 2 months, we've been seeing a consistent 2 million Ethereum queue for exiting. And this is on a rolling basis, right? So we should actually see this number slowing, like lowering as the Ethereum is getting unlocked. But we're not. We're seeing this consistent over 2 million Ethereum locked in the exit queue. And so what is going to happen when they exit, right? Well, very high likelihood of selling. Now, granted, we're getting a lot of buying, like Bit Digital and some of the other Ethereum treasury companies. But are they going to be buying millions? Are they going to buy enough? And if the answer is no, well, that means you have more sell pressure than buy pressure, showing where we are in the cycle. We're now also hearing about a Dogecoin treasury. What in the Dogecoin is going on here? Clean Core Solutions adds 710 million Dogecoin to their treasury, saying that they want to scale their treasury responsibly with transparency and resilience as they aim to accumulate 1 billion Dogecoin tokens. Now, there's some issues with this, but let's first understand. New York Stock Exchange listed company Clean Core just added 710 million Dogecoin to their balance sheet, edging closer to their target of 1 billion. They said Clean Core's treasury includes total Dogecoin holdings of over 710 million, with over $20 million in unrealized gains and sufficient cash to keep acquiring Dogecoin, supported by the partnership of Bitstamp by Robinhood. Here's the issue though, okay? Every single year, Dogecoin inflates by minimum of 5 billion coins. So if they have 1 billion coins, I don't know what the total supply is. It's hundreds of billions, I would imagine at this point. But every single year, 5 billion coins are printed. So that's 20% of what they're holding is just printed every year. And this is the issue with these meme coins, is that the hype around it has to outpace the inflation, which we did see in previous cycles. But even in this cycle, in 2024 to 2025, we haven't really seen any Dogecoin activity. I mean, Dogecoin didn't even go above 70 cents, its all-time record high. And there haven't really been any like shillers of Dogecoin. There have been a lot of meme coins. Remember, back in 2024, we had meme coin season, celebrity coin season, Huktua coin season, Argentina coins, everything was going on. That was the meme coin season. But a lot of it wasn't focused on Dogecoin because maybe people feel like they could have made more money in these other coins, and they probably did, right? I mean, the Argentina coin failure, that the developer said that they extracted $100 million in the first day from the market. $100 million in US dollars they extracted from that coin in the first day. Okay, so that's where the money was going. It wasn't going into Dogecoin. So a company like CleanCore that's purchasing Dogecoin for their balance sheet, they're going to have to keep buying and buying and buying and buying and buying and buying. I mean, to me, it's a little bit indicator of end of the cycle. Meanwhile, we're also hearing another company called Pineapple launches a $100 million injective treasury with about a $9 million purchase of injective. Pineapple Finance has launched a $100 million digital asset treasury company with an initial purchase of just under 700,000 injective tokens worth about $9 million. The Toronto-based fintech said the purchases mark the first phase of its plan to become the largest injective holder and staker, with all tokens to be deployed on chain for staking at an expected annual yield of 12.75%. That yield is nearly double Ethereum's and about 1.8 times higher than Solana's current staking rates. The move follows Pineapple's September 2025 $100 million placement, private placement to fund the treasury. And remember what I said to you guys earlier in today's video. Wall Street is getting in to control the markets. Okay, this may look like Ethereum maximalists and injective maximalists, creating these companies, which some of it is, but Wall Street is in control, right? These publicly traded companies, they have board of directors, they have shareholders, they have shareholder meetings, they have shareholder votes. So ultimately, Wall Street controls what they do. And if Wall Street says this is a shit coin, dump it, get this other coin, the company may not have a choice. They may have to do it. And so this is where it's really important to understand how all of these dynamics are at play here. This looks bullish. And in the longer term, I think that it will be somewhat. I mean, Dogecoin, I don't know how it's going to be bullish because they have to keep buying to offset the inflation rate, right? And keep the demand side up. But yeah, it's very interesting stuff. Meanwhile, we're also hearing Trump meme coin issuers seeking $200 million treasury as the token has plunged 90%. And so the market is already pricing in these like the bear market, in my view, right? We've seen this across the board. And so are we already past the euphoria phase and these are just kind of like last ditch efforts to kind of revive the treasury companies or the coins? Because at the end of the day, the only real way for the coin value to go up besides just fundamentals is by buying pressure. And that doesn't seem to be working that well because look at all the Bitcoin treasury companies that we talked about. They're all down pretty substantially for the most part. Ethereum treasury companies, they're down for the most part across the board. And the underlying assets are hitting all-time record highs. So let me know what you guys think about everything we discussed, from the descending triangle and XRP price to Polygon, to Grayscale, to staking, to Wall Street controlling the markets and getting into crypto to control crypto. And also Ethereum's exit queue continuing to maintain an over 40-day exit wait time and over 2 million coins in that queue to exit Ethereum staking. I'll see you guys in the next video. Don't forget to give this video a free thumbs up. Let me know your thoughts, comments, or questions down below. And make sure you guys are also subscribed to the channel. That way you never miss a new video. I'll see you guys in the next video. As always, crypto on.